Hello, Mavericks. It's Joe. It's Monday. It's the 13th of February. Let's get into the roundup. Take responsibility. You guys get it. So, quick market analysis. It's just we followed through with what we saw on Friday. A little bit of stability here in the markets as they retest that moving average. Big surge on Thursday of last week, or I should say 2 weeks ago. Carried over a little bit of a slow bleed back to support levels, but so far those support levels have held. So the markets push higher here on Friday from Friday's support. Options expiration this week. Let's keep an eye on the VIX. I think that's going to be a pretty good indication of what to expect if we see another round of protective puts being purchased by not only institutions but the retail trader. How did we fare today? Well, up about 1% across the board. 1.5% on the Nasdaq, just over 1% on the Dow and the S&P. Russell's 1.2%. Oil and gold went a little south. That's totally fine because everything pretty much participated. The advanced decline line, 68% advancing, 28% declining, and 4% just kind of sticking nowhere. So this was a pretty healthy move to the upside in general. Below the 50-day moving average, a little bit of a taper off. I saw this as high as 80.20. We're at 73.27, and it's because a couple of stocks out there didn't do very well when we had the correction from 2 weeks ago's surge to the upside. So the blow off top is still kind of in play here. Let's jump to the chart. But it looks like we are finding stability here on that 20-day moving average. So was it a blow off top? Well, not really. It was more of a surge, just a little bit of a surge through resistance area. We'll have to see what we do moving forward from here if we're going to move back down and break below that 20-day moving average, or if we're going to indeed come back up here and retest this move to the resistance here at about the 420 mark, which is above December's high, and actually start moving back towards August's high. Now, it might be a little early yet, but we are seeing some things in the move. Well, according to Wells Fargo, it looks like the bear market is over. I think that's a little optimistic. The more that this gets pushed aside, I think the more that we could see problems moving forward. We do have the CPI number coming out tomorrow, and we'll see what that brings. We also have a few other things I'll talk about here at the end. But where we sit right now, it's a pretty decent little channel. And I just believe that we have to stay to the half glass full. Maybe a little bit of a bullish flag pattern, but being above this resistance set in December is pretty strong, especially when we get the crossover here on the moving averages. It's a little bit bullish. We are starting to taper off as far as volume. We are coming out of, I have to say, a pessimistic earnings season, but the markets don't really seem to care. Let's move over to the Qs. Very similar. It is got the very same pattern. It's doing very well off of a nice doji set off of that breakout area that we saw into that first news announcement with the Fed. But it did have the pullback, and that's just all it is. Here's that crossover. We're above averages. We are definitely above December's high. We got quite a ways in the Qs here before we get to August. But do we start to come back up here and roll over, or are we going to move higher from this point? And just, hey, let's get going. February's expiration, we've got options expiring, so we got a bunch of anybody that wants to position themselves for a little bit of worry or fear will do so. Now, here's something interesting, and this is something I'm going to be following along with VIX as well. If we are complacent and happy, and we truly believe, the sentiment, I should say, truly believes that we are more inclined to do this than actually come back and retest maybe this 50-day moving average. Corey and Darren made mention of this on the weekend class, and I truly have to agree. We haven't seen a full surge of the bears at all this year. And this is the beginning of 2023, folks, and it's been nothing but absolutely straight up. Even with, and to kind of top it with a euphoric move, with the Fed getting on board with being a little bit more dovish, right? So I haven't seen a true trust from the bears. But so far, a little bit of a bull flag pattern as we pull back in both the Qs and the SPY, at least for today. We'll see if that CPI changes anything tomorrow. You could see everything participated. There's a few out there, some outliers. Tesla's always doing what it does. Disney slid a little bit, but they beat some numbers because they cut some jobs. And energy took a little bit of the brunt end. We saw that with gold. Well, I shouldn't say gold, but oil and energy took a little bit of a pullback, but everything else kind of moved to the upside. I'm definitely sticking with the +2 overall in the month. I have to. We've had a big move up since January. We're above the averages. The averages have crossed. They're in the right plane, and we are now above December's highs. And we trifled with them a little bit Thursday of last week. Friday had a little bit of a stopping point on that 20-day, and today's move, it's pretty optimistic. We'll see what the CPI does, but it's moved it higher. If the CPI is coming in lighter and showing that inflation is in check, and we are indeed moving south, then I don't know why we wouldn't be testing that 420 level by the end of the week. So I have to stay +1. I was at 0 because for last week because we were pulling back. Now we have the confirmation of that bull pullback. I got to be a +1. Let's get into the potential trades. I didn't have much that jumped out at me. There's a lot of bulls out there that I didn't put on this list that are doing great, and there are some bears that are still hanging on. I just wanted to be a little bit more recent. Let's jump into some of the ones I liked. Here's STLD from the weekend class. I like it because it's actually confirming a bull pullback. This isn't something this is outside of a standard move for this. I would expect a little bit more of choppiness. Here's a big surge to the upside, but this is kind of what I would be expecting moving back up to 130. So diagonal, absolutely. Targeted butterfly, maybe go a month and a half on this. Take your time. Why is that? It's basic materials. And what I've seen basic materials do when the market surge is just get punished. When the markets have their big push to the upside, everybody's jumping into the darling stocks, the big tech, the oversold stuff, expecting to see what we saw in 2020. There's still a lot of optimism holding on to some of these big names and expecting, the people that missed out in the first move from 2019 to 2022, and they want to see if they can catch that again. I'm just going to go ahead and spoiler alert for you, that will not happen again without a pandemic. Doesn't mean that we can't see them come off of the bottom, but the gains and some of the numbers that these companies were posting is just unattainable, barring an epidemic. But I do like steel here. I do think a 130 target in about a month and a half, slow play this sideways to up might be something kind of fun. Here is A&F, Abercrombie & Fitch. This also came from the weekend class, more of a high base. I would be comfortable, folks, playing this more of sideways. And the reason being is because anything above the 29 mark to below the 32. So condor guys, I think this could be good. I'd like to see a little bit of a blip to 32, but I don't know if this is going to really do anything like this. I think we're going to get a little bit more like this between 30 and 32. So this is more of a sideways. I have a sideways arrow on it, even though I do have it on the bull side. Oracle, yeah, it's a software company, but it's been super strong. I do like the fact that it did hold its support. What I mean by super strong, folks, is it based while these other ones were getting hurt. Then it had a surge, and guess what it's doing again? It is basing. So this thing's holding in there pretty strong. I would see an argument of playing this as a breakout above 90 if the markets do indeed surge. Let's say the CPI comes in nice and loose, or soft, I should say. The Fed makes a comment on it saying this is exactly what we want to see. Yeah, we get another market surge. I think this participates to the upside. Going on to the sideways trade, this is OXY from the weekend class. I like this as well. Corey mentioned this because it does have a pretty good range. And this little crossover, they're turning back over. They might cross back. This has got a really cool between that 68, 62 mark. However, for you guys that are waiting to see if this will build power, we do have an argument for a pretty anemic, or the beginning of what could be a symmetrical triangle. But I think if we pin this thing right around, let's get rid of my chicken scratch here, right around the 64 mark, I think we'll be okay, at least in the shorter term. You guys, if this has options for weeks, you don't want to play this a month out, maybe a week and a half, might be kind of cool. And then, yes, folks, only one on the bear side, and the reason being is all the bears kind of got, I don't want to say wiped out, but when you got a day like Friday and you got a day like today, they're both up, it's going to kind of hinder some of the bears. This one seemed to look the best, and what I mean by that is the weakest. So Here is Archer Daniels. I do like it. I like this stair step that it has done. The big break, if you really want to hold on, is going to be below that 80 mark, and you can see this was, I do believe, its earnings, but it really pushed and pulled right through there, and it's just barely hanging on. So if you want to just keep this on the back burner, maybe a break below 80 might be a cool entry point. But if you want to do something now, a diagonal spread could work as you're waiting for that to happen. Just depends on your outlook in the overall markets. So we got a bull pullback. It looks to be confirming. In fact, it is. The way that the markets closed today did confirm above the previous day's high, which was Friday. So let's keep an eye on that upper resistance level because that's the next target it's going to start to reach for. We could be in for some sideways trading if we get up there and there's a little bit of reluctancy when it comes to the participation of the traders. I have yet to see a true bear search. I have yet to see a big push to the downside based on I don't want to call it warranted fear, but something in the tea leaves that that kind of spooks some of these short or late term buyers. So retail sales is something I'm also going to put a little bit more weight on since we are the main driver of this inflation. As always, check your potential trades. We are on the tail end of earnings season. It'll be interesting to see. I'm going to focus a little bit more on what happens towards the end of this week if we do see traders selling some puts and buying more puts or just letting them expire. And I want to watch the VIX here and see what kind of activity we see in the options market when it comes to hedging out for next month. That's all I got for a Monday. It's a Monday. We'll see what's going to happen over the next couple of days here, and I'll talk to you guys on Wednesday. Thanks for joining me. We'll talk to you next time. Bye, folks.